Okay, folks, welcome back. This is our daily upload for July 30th, 2020. And our dollar index is on the left-hand side. This is our daily chart. And I've stripped everything down to what is salient at the moment. We traded up into the mean threshold of the last up-close candle here, bearish order block, and expanded down as we were looking forward to seeing. It's almost made its way to consequent encouragement of the fair value gap in here, and I'll expand this so you guys can see it. Okay, so it's this gap right here, and the upper level is the fair value gap premium level and fair value gap discount level, and another old low here where sell side liquidity would be resting. Okay, we're gonna look at the hourly chart. Lovely run into a bearish order block, breaks down, comes right up into institutional order flow entry drill, fair value gap, trades up into it here, and then expansion on the downside. So we have just a little bit more and we'll get the consequent encouragement. I'll leave it to you to do your own fib, laying it on top of this level in here. It probably will hit that going into tonight. I still think we could probably still see some acceleration. It's dropped a lot, but I'm waiting for some big washout down close candle, and that'll probably send us into or below that 92.69 level. All right, so you can see in the 15-minute time frame, another view of that order flow entry drill technique, and runs lower. So it's got a small little imbalance in here, and it's below this old low. So again, I'd like to see it continue accelerating down and not come back to this. Okay, so the same thing remains. I don't need it to come back up to trade to the top end of that premium level on the fair value gap I've outlined on the daily chart. It's already in it now, and I would expect it to again accelerate as we get into the 92s, down into 92.70, 92.69, where that fair value gap discount level is. Now, I'm not saying that's the low. I'm not trying to predict the low. And again, this is one of the things I've mentioned to you in the last couple of days. We're not trying to pick the bottom. We don't want to do that. But sticking with the narrative of bearish dollar, long foreign currency has proved fruitful. Real quick, you can see the optimal trade entry in here. Bearish order block, buy side liquidity, runs both, and then acceleration, institutional order flow entry drill, and then continuation into the levels that we were outlining yesterday. Let's go into euro dollar. So here's euro, and we'll maximize this, as you can see. And we've pierced the old weekly high, as I indicated on Twitter today. It's a nice run up in here. Now these levels here, this is actually a fair value gap over here. Okay, so here's your fair value gap there. Buy side liquidity, relative equal highs. We've already pierced that, and we'll see if we want to dip into this fair value gap, the discount end of that fair value gap, and a premium end up here. And consequent encouragement will be obviously in the midpoint right in here. We'll drop into an hourly chart. This swing low, the swing high, short-term low, fair value gap. Look at the bodies of the candles. Draw that out in time, backwards, not in time. Then we have a down close candle, fair value gap, sell side liquidity, optimal trade entry, and expansion on the upside. And we should see it again, much like I mentioned on the dollar. I want to see large candles. I want to see it create large candles on the upside, and that would be capitulation, and then we can expect some measure of consolidation and maybe even a retracement. But right now, we're staying with the narrative. This was a nice consolidation in here. So we had this leg up, consolidation. So it feels like 119.20, 119.25, and any acceleration could see 119.50, and maybe even a blow off to 120. I'm not suggesting it's absolutely going to go there, but it could. And if you have a small piece still on, you might want to try to see if you can aim to hit that. All right, you can see the 15-minute time frame. Again, just a reversal of what we saw in the dollar. Optimal trade entry, runs higher, consolidation, mitigation block, last up close candle here. Why is that a mitigation block? What makes it a mitigation block? Well, we have a low, high, higher low here. So it's not a breaker, it's a mitigation block. And then they accumulate in there. So they mitigate any shorts that would be held in here. This high is broken with this candle, and then they spend time in here mitigating. The algorithm then enters another level of protraction, trades higher, clears the weekly high. Now we're looking at the fair value gap as mentioned on the daily chart. So again, I want to see this area stay open, just in the opposite manner that I outlined on the dollar. We don't want to see it trade back down into here. Okay, we like to see it continuously move up. Now, it's not to say that it can't come down here, rebalance, and then continue higher, but it's more likely to consolidate or reverse deeper if it goes into this area now, because we're so inflated in terms of such a premium in the market. It's going up a lot. So, it's up 1,000 points. And if you don't remember, it's the lows that we were talking about back here. Right back in here, that's 108. Remember I said I will take the market down below this low here, get everybody thinking it's going to break lower, and then send it higher above this high, and maybe into the levels that we're looking at now. And there we go. We're trading over 1,000 pips, and everything is in recording. My viewpoint, everything. So it's just lovely to see it pan out like this. And we're going to look at the cable market now and wrap this video up. Nice, short, sweet. The last two videos were kind of long. All right, so you can see we have the cable market. We traded through the fair value gap in here, and I said it'd be interesting to catch a long, in my opinion, only if we trade back into this fair value gap. And we'll take a look at that now. We do have a rejection block in here that I don't have annotated, but just on your own charts have this closing price at 131.28, 5 pipettes. Okay, so that's a level to watch on the next near-term upside. And then we have the buy side liquidity, as we've been discussing the last few weeks. And let's drop into an hourly chart. Okay, so here is that fair value gap. They're working a discount level there. Clear some sell side liquidity, optimal trade entry, boom, takes off right in here, right there. Look how the bodies are respecting that fair value gap. That's the premium end of the fair value gap. And then it rallies. Now, it doesn't look all that impressive on here because it's an hourly chart, but it's still 50 pips. We drop down to a 15-minute time frame. Here we are. So now we can see a really nice optimal trade entry. Trades back down into the fair value gap, then expands on the upside. So right here, this pattern right there. What time of day is that? 11 o'clock. You can take that trade based on New York session rules. And there you go. If you drop down to a 5-minute chart, you can see the classic setup that I outlined for New York trading. Low to high. What's below here? Sell side liquidity. What's right here? Fair value gap. Bullish order block. Bodies of the candles. Watch. It's just like magic. Alright, so here's the high of that candle that would frame the discount end of the fair value gap on the 5-minute chart. Look how the body's just a little bit below it. It's not by much, okay, but it's respecting that and then sends it higher. And then look at the little hook down into the order block right there, and then look at the bodies of the candles here, staying right on top of that premium level of the fair value gap. But it's supposed to be support and resistance. Nope. And if you're just a purist at heart, there's your order block, consecutive. Use the body of the candle, the open. There you go. Bang. And if you used the very, very low end opening price here on this candle for the last down close candle is 130.20 and 6 pipettes, and the low comes in at 130.20 and 7 pipettes, and then this candle here is 7. So we're only off by 1 pipette to get that opening price there. And again, it's on a 5-minute basis. So just a brilliant delivery of prices, just absolutely stunning. And you can see we have a nice one in here as well. Fair value gap, bang, hits the discount end of the fair value gap, sends it higher, consolidates around consequent encroachment, and bang, hits it, rallies. So it's working off of levels that you've been taught with the commentaries and the core content in the mentorship. So hopefully you found this one insightful, real short, sweet. I'll build on other things, obviously, because tomorrow we have the weekend review, and I'll try to have that up by 9 o'clock tomorrow my time. Until then, I wish good luck and good trading.